Morning, this is Trading Limited. Thank you so much for joining us today. Thank you so much for being our valued customers. Thank you so much for joining us on Instagram as well. Please have a look at our disclaimer. You can go straight to our website, ECLUBTRADING.com. So let's get straight to it. Let's start with the S&P. What happened this week? We had a really positive week in the indices. Both the S&P and the Qs, they made a new all-time high. We had a very busy week of earnings reports. We had some clear winners and some clear losers going forward. So the biggest winners of the week were Google, Microsoft and AMD. They reported absolutely stunning quarters. While Google and Microsoft were rewarded for these great quarters, AMD continues to be for sale. We're going to talk about this later. Also, Ford was an impressive winner given its push into the EV sector and the raised guidance that it offered in its earnings call. We had also two disappointments on Thursday night. Two big tech companies, Apple and Amazon, reported weaker than expected earnings. While Apple's report was in line with expectations, we are usually used to Apple easily beating estimates. And this time, CEO Tim Cook explained the weaker than expected report due to the chip shortages and the supply chain issues, which continue to affect the entire economy, this new post-COVID economy in which we are all living and working. Amazon again talked about the difficulties it will have next quarter, actually this coming quarter, with all the deliveries it needs to do for the Christmas season due to the lack of people willing to work, given all the stimulus and everything that happened in the economy since the pandemic. And also it had a really tough comparison to the previous year and previous quarter, given the fact that now people are moving around, they are spending less on Amazon, they are going more to actual physical stores, they are spending more money on holidays rather than home improvements, electronics and other stuff that Amazon sells. So these two have been big disappointments. And the week before we had all the social media stocks which have reported much weaker than expected ad revenues due to Apple's new privacy policy. And as a result, we kept pounding the table. As a result, Google was the big winner because most of that ad money, which was no longer spent on social media platforms such as Facebook, Instagram, Twitter, Snapchat, and so on, moved to Google and Google Ads. So this is the SPY. Impressive rally in here around 426, 427. If you ask analysts on Wall Street, they were telling you that we are due for a 20 to 30% correction. They were looking at the 200-day, which was all the way down at 412. They were talking about inflation, high oil prices, energy costs, and so on. We remain tactical. We told you in here that it's not the time to press shorts, but to look for a possible reversals, as we already had a big move down from 454 all the way to 426. This is exactly what happened, and we had an impressive run. Even from a technical perspective, if you look in here, this looks like an inverse head and shoulders with the head here, the left shoulder in here, and the right on the right hand side. So if you want to see exactly the charts as we see them, I strongly suggest you subscribe to our YouTube channel, or even easier, you go to our website, ECLUBTRADING.com, and you can subscribe to our free plan and you will get these videos straight to your inbox. So we had a huge run in the SPYs. From this low as 426, we went as high as 459. We easily passed the previous all-time high at 454. And now we are building in here above all the moving averages, but definitely a bit extended. We are not as extended from the 8-day, but if you look at the 21-day and the 50-day, we are becoming more extended in the SPYs as well. And we may be due for a little pullback before Santa Claus rally, if we get one this year. Remember that there are still a lot of headwinds. Inflation is still high. Interest rates and tapering will be on the agenda of the Fed meeting on Wednesday. Chip shortages, supply constraint shortages, and so on. So there are still a lot of headwinds which have not been resolved. Oil prices remain high. The US dollar remains quite strong. So these are several headwinds which have not been resolved. And the earnings reports did point them out. Most companies did talk about them and said that there will be important headwinds going into the next quarter and even the next year. We have a similar situation that occurred in the Qs. Despite the weaker than expected earnings from Apple and Amazon, we continued higher. We made a new all-time high yesterday, 386.28. This was very impressive. Yesterday, for those of you that subscribe to the morning game plan, we said that the Qs need to hold this 380 despite weakness in Amazon and Apple in order to show commitment to this move. This is exactly what they did. They put in a low of 387. The new Qs, impressive move again from 350 through 386. If you missed this move, probably now it's not the best time to be long the Qs, to be long the tech sector. There are pockets of strengths and pockets of weakness. Go with the strongest stocks, and usually go with the stocks that reported the best earnings, and those are Microsoft, Google, and AMD. These have reported the best earnings. So if you want to continue to see the glass half full, I strongly suggest you are buying dips in the strongest names out there, and not look for possible dead cat bounces in some of the stocks that are not working so well. The market is still very uneven. We still have a lot of stocks well below their 200 exponential moving averages, which means they are broken. We have about 50 to 60% of such stocks. So with the indices at highs and with so many stocks below all moving averages, there is a divergence which is not very conducive for long term. Now let's look at Google. This has been an amazing trade for us. We kept pounding the table for Google, as I said before. Its earnings, it opened up lower after earnings, then it pushed through its moving averages. It gave you a really nice day one candle, past its all-time high 29.25, went as high as 29.73. We were long call options, we were long the stock from 2,800. This has been a great day trade, great week for us in Google. It consolidated yesterday, Thursday, and yesterday we re-engaged Google below 2,900 for a really nice 70 points moving Google. We are still long Google overnight, but we have less size for the weekend. Microsoft, another great report from Microsoft this week. It's not facing the same constraints as Apple or Amazon, so Microsoft was a clear winner and reported blockbuster results. Its cloud computing business is also working very well. It's gaining market share. So it put in a new low, a new high in here, 326. Then we had options in here which tripled overnight, and then it rested for a day. And on the report, when Apple and Amazon reported weaker than expected earnings in after hours, because we can also trade after hours, we bought some Microsoft common stock, because our thinking was that if some money moves out of Apple and Amazon, clearly investors will look for the strongest stocks out there, which were Google and Microsoft. So this is exactly what happened. We bought some Microsoft on Thursday night in after hours around 321, 322, and yesterday we got paid off. It went as high as 332. We are still on Microsoft. It's a bit extended in here, but we have less size, and in case it decides to go higher, we will be involved with it. If not, and it makes a reversal, we're gonna get out of the way and book our profits for now. Next up, it's AMD. AMD had, again, like last quarter, one of the best reports out there on the street. It went as high as 128, and then after it retreated below its previous high, which is never a great sign, like we talked about in Bitcoin. Remember when Bitcoin broke out of 65,000, went as high as 67, and then came below it. This is not a great sign when a stock or an asset does such a move. So for now, AMD doesn't look great. The report was really good, but the main issue with AMD, we talked about this guys a while ago, it's the whole deal with ceilings, and there's an arbitrage trade, and until this deal is settled and the investors get their AMD shares, the ones that are having ceilings and so on, AMD is going to continue to feel pressure. I would definitely be a buyer of AMD into any weakness. I tried it for a day trade, it didn't work out. But for longer term investors, if you can snatch up some AMD around 114, 117, I believe this can be a great long-term trade for you. Next up, Ford. This has been a really impressive stock. We engaged it in here around $13 a while ago. We played it up to $16.70 above the previous high. Then it entered the period, it retreated, and we decided, since Ford has been so good to us, to buy some call options. We bought the $16 and the $17 call options before the earnings. We made about 400% on them profit because Ford had amazing earnings. It continues to be a strong player in the EV market, and its CEO is more than ever determined to be the next Elon Musk. They have all the ingredients to produce a lot of cars, a lot of EV cars at affordable prices, and you know very well that Americans love their Fords. So far so good for Ford. After the earnings report, we also bought some common stock to double down on Ford around 16.30, and after hours gave us a really nice trade to 17.58. And today we actually bought some more as it did to 16.55. We bought around 16.80, some more once it went again past this 16.70 pivot resistance. So we are going long for over the weekend. So these are our three stocks that we are long: Google, Microsoft, and Ford. Now let's talk about the two disappointments. This is Apple. Apple reported weaker than expected sales for its iPhone. For the Macs, the only bright spot in the report were the services, which were better than expected. Demand is really good. CEO Tim Cook said that they cannot meet demand, so this is obviously it's an issue, but it's better to have demand than not have the demand for your product. So Apple needs to solve its chip shortages. They will probably solve it, they said, by the end of next year, so it's going to take longer than expected. But all in all, the dip was buyable yesterday. We tried it versus a 30-minute low as we suggested in the morning game plan. So we are also long Apple overnight as it went above its 8 and 21 day. In an interview with Jim Cramer, CEO Tim Cook said that despite all these headwinds, Apple expects a record quarter for its December quarter. So we are long Apple, and we continue to hold some longer term options for March next year. Amazon dipped yesterday. Very weak report from the e-commerce giant. We talked about this earlier. Dipped below its 200-day, managed to reclaim it. It gave you a nice entry if you wanted to play long Amazon. Currently, we have no exposure to Amazon. Amazon's strongest spot in the report was its AWS business, its cloud business, and this is the only thing that keeps the stock afloat for now. It's still in this huge channel between 3,000 and 3,700. It's going to need a split. It's going to need a big catalyst to move in either direction. So for now, it's really difficult to trade. See if it can get above all the moving averages around 3,400, and maybe it can give you a trade higher. But I wouldn't be a buyer of Amazon, especially with the indices at highs. If we get a pullback, I believe that Amazon is going to be one of the first that investors will get out of. Thank you lastly, sorry, one more. I want to go over Facebook. We talked about Facebook last week and its earnings. Facebook announced a change of its name and the rebranding. It's going to be called Meta. And it had a positive reaction from investors. We bought some Facebook common stock once it got above this 309.60. It was a really nice day trade. It got rejected at the moving averages because we talked about this. Once a stock crosses below its 200-day moving averages, then this line becomes a big resistance level. Facebook did not solve its main issues that it has just by changing its name. It needs to change its culture and the way it uses privacy. In the world in which we live, privacy is very, very important to its to all customers. So definitely Facebook has some issues to resolve, and it's not a very liked stock out there. What they're trying to do with Metaverse is really cool and really nice. You should read more about this. I strongly suggest. This was a really nice day trade for us yesterday. Again, Facebook tried to push above the moving averages, got rejected again. We did put on a call spread for later next month in case Facebook does wake up. Thank you so much for joining us. I hope you had a really productive week. It's been a long week, a stressful week with all the earnings going on. Now let the dust settle a bit. We'll see what the new month brings us. If you had a good month, I strongly suggest you book some profits and see where the market takes us from here. Remember the Fed meeting on Friday, and we'll see how that goes, and we'll keep you updated. And at ECLUB Trading, we grow together.